It's Goldman's Urgent Warning. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, a major storm is about to hit the stock market, and that's why we're going to take a look at the technicals, momentum, and more importantly, the machine positioning of the broad equity market, the bond market, gold miners, the dollar, and even a recovery trade on platinum to show you how to position yourself based on what we see from the machines coming from Goldman, TD Securities, and Metre before this storm hits. And with that, let's head over to Goldman, where we picked today's story up with a headline from their tactical flow of funds report this week, improvement. We got a flash update because here it is, the hurricane storm update. And here Goldman says there's a new storm front brewing in the equity market, and it might not just be the mechanical releveraging of length sold in equities. Scott notes he opened his flow of funds database this morning and was shocked to see how quickly have changed. Did weak September seasonal get front run? He's asking, because what's important to understand when we talk about machine positioning, why do these things matter? Because they are trend following. So when the trend moves higher, the machines are going to chase it up. When the trend goes down, they're going to short it and sell and chase it to the downside. Now the issue is, because these machines control so much money, when the trend shifts and they start to move, well, they become the trend. And here's what we can see. Just this last week, we can note that the trend of the machines was lower. They were chasing the market down. And we talked about last week that there may be a major breakdown in the U.S. equity market if these machines continue to sell. And lo and behold, buyers stepped in. Here you can see the S&P 500 in red driving up. And now you can guess, what does this mean for these CTAs, these risk parity and vol control funds? Well, they're likely to buy, and that's the case for the storm that's coming here, because we see now a lot of U.S. investors are getting into the position where they believe the U.S. equity market's going to go down, and yet one thing they're missing is not just the machines that are going to come back and start buying back in from what they sold, but we're going to see money coming out of Asia and money coming out of Europe headed over to the U.S. equity market, because remember, their economy slowed down first. We're last. If you've ever wondered why you tend to see these big major double tops in the U.S. equity market before everything falls out, well, you're seeing it right now. And what we can note is they have a CTA green sweep and large demand regardless of a flat up or down tape over the next week. They have a huge $107 billion to buy over the month. We'll take a look at that. And not to mention, they've got month-end pension rebalancing. We just saw that. Labor Day is usually a good trading day, so we're seeing, of course, that happen going into the weekend. And this is even more interesting. Bond CTA demand is a green sweep. Wow, that means everything could be rallying here. And over the next week, let's take a look at the equity side. In a flat tape, we see $56 billion to buy. That's global equities, 8.3 in the S&P. That's not a big number, but remember, we saw the global equity market sell down in an up tape, $70 billion to buy. Even in a down tape, they're buyers. How about over this next coming month in a flat tape, we see buying? I think they've got an error here, $107 billion to buy. Of course, should not be a minus sign. $20 billion to buy in the S&P, $174 billion in an up tape. So what you're going to see here is all of a sudden this surge of money back into the global equity market, giving people some sort of sign that they're going to look at this and say, wait a minute, the economic data is continuing to slow down, which of course we'll look at during the week coming up and the weeks to follow, and they'll see the equity market going up and say, wait a minute, maybe the markets know something that I don't. Well, it's just machines chasing price higher. And in down tape, $120 billion to sell, only $56 billion in the S&P. Base case right now, market goes higher. Now let's take a look at what we see from TD Securities. Over 45.75 to buy on the S&P. That 43.40 still holding true on the sell side. How about we take a look at Metre, still at 4,600 on the buy side, but they want to note here, the systematic space where vol resets and data feeds into perception of a pull forward and Fed easing. So again, remember, the news doesn't make the markets make the news. It's just going to be, look, the data's slowing down, the Fed's likely to pause or cut, and of course everyone's going to get this euphoric start to move to drive equities higher, and then they're going to find out when the Fed's cutting. Well, it's never good news, but the machines, they don't care. They don't look at the Fed. And they're now tilted back towards having to reallocate, releverage, and buy back some of what they sold in the recent weeks. Let's take a look at our screens here. Momentum on the S&P 500 is positive. The RSI moving up, it's 57 and heading up to that direction of oversold. Remember, we're looking for 70 to get to an oversold territory, so it's headed that way. MACD is beautiful, positive cross. Our own Momentum Timer Pro, our subscribers, noted 4 consecutive daily buy signals. That's down here on this signal right here. That's Momentum Timer Pro. You can find out links to all of our subscriptions in the description below. All come with a 14-day money-back guarantee if you're not satisfied. We're on a maximum sell window over the last month. This is what the machines were doing. So I want you to see here, this is going to chase up as the machines start to buy. Our own mimic of these reports. This is our CTA-Timer Pro right here in the middle. We see that on the short, it turned into buying mode. It's almost long on the fast algorithms. The slow ones never closed out into a sell side. Look for them to move higher too. As of right now, we still hold our buy at open at 404.09. Stop loss held at 432. We did not cross that line. Close at 451. Upside target, I'm going to say a little bit higher here. And the only reason I'm making the case for a small move higher is the machines still haven't fully committed into this. We'll see if the market goes up next week. Look for the machines to fall in a big way. And let's take a look at, of course, the charts here. I'm making the case we're just going to see kind of maybe a minor move right up here about to 460, make a new high over the last one. That will get people very euphoric about the U.S. equity market and say, look, this thing's going to make a run at the all-time high. Probably next week we'll adjust our numbers and say, yes, that's going to be our target is as well up here near the 480 level. But so far you see this beautiful bottom. You've got this neckline. Here's your left shoulder, your head, your right shoulder. You got two shoulders on both sides. It came up here. Would have loved to see it pull down here and hit support and rally up, but right now a break over, we'll just say roughly this 454 to 458 level. That is a breakout to move a test of all-time highs. All right, let's take a look at the tech window here and see what we've got on QQQ. Momentum positive, of course, it's following the S&P higher. RSI is also at 57. Beautiful positive cross on the MACD. So we see momentum moving higher. 4 consecutive daily buy signals. That's our Momentum Timer Pro. Notably, again, on that 1-month window, maxed out on the sell side. So this was just a short-term move to the downside. The 3-month and the 6-month windows, they didn't move a whole lot. As you know, we now have a new position here. We went from a short position on our CTA to a long position on August 29th. That is our trigger signal. If you see price start to move up and you see it go from short to long, you better jump in. So we have a buy at open at 366.91 right from the report. So you're a subscriber, you can go pull that one and take a look. Friday's close 377.59. Upside target 388. Wow, maybe I am off my rocker here today. 388 is really up there, but absolutely you think was just a retest of these recent highs and maybe a nudge above. And I think that's going to be the big bull case here for the market is we're going to see a slightly new high and everyone's going to say the market sees something the Fed doesn't realize it's going to do. It's going to cut rates. Everyone thinks it's bullish until it's not. But notably see the RSI heading up here nicely. MACD's got a beautiful cross coming into positive territory. Otherwise looking good on the momentum side. Let's take a look at the bond market because this is kind of be the game changer here. Remember, the Fed's view is rates go higher. So if the bond markets, you start seeing rates go down, what does all this mean? You see the equity market rallying, you see bond prices rising with interest rates falling. What is the market trying to tell you? It's the Fed's going to cut. But again, I want you to see a lot of this is just machine positioning here with everyone filing in afterwards. So let's take a look at what's going on. This from, of course, Goldman with their global CTA bond update. Remember, this just isn't U.S. bonds. This is global bonds. Everybody in the pool. Over the next week, flat tape up $4 billion. They buy $4 billion, and an up tape $33 billion to buy. Down tape $15 billion to sell. So this would be going into Friday. But look at this over the next month. Flat tape $36 billion to buy. Not a chump amount of change. But look at this, and an up tape If you see yields come down, bond prices rising, 360 billion to buy, even in a down tape, they're buyers at 60 billion here. So what will happen if you see rates fall? What the narrative is going to be is the market saying the Fed's going to cut here. And really, I just want you to see is machines at max short positions. But don't worry, we'll cover how the market will interpret this as we look over the next couple weeks and see what happens. TD Securities, well, they're already maxed out to the short side, and that's why this matters, because when these machines get into max short positions, it doesn't take much for them to short cover because they can get outright slaughtered in a big rally in price. Under roughly 4.05 are their buyers on the 10-year. Keep an eye on that number to look to chase that to the upside. We note that Metre, they're maxed out to the short side too. That's a recurring theme. All the machines are max short the bond market, and there's your opportunity because we can see this from this Wyckoff bottom. We noticed that it went sideways here, and the spring, based on what this drawing here suggested, that maybe we went down more than it should. But I said, you know what? I believe this is a last effort to pull in all of the bears. It bounced up, it's come back down, it made a higher low and shooting up. Let's take a look at our screens here, our momentum screens, and then the charts. Because we see momentum is positive on TLT, the RSI is 50, MACD's got a positive cross. There's 7 consecutive daily buy signals on Momentum Timer Pro. And what happened on August 29th, we got that flip up on the CTA report from the max short. They were starting to short cover. Now remember, that is the signal. When we told this to our subscribers, twice a week, I put out a list to say, here's stuff to watch. And when you get to that magical minus 100, if that's all you look for and waited for that fast algorithm to shift and buy, it works so many times. It's so great. It's not perfect, but it works fantastic. Again, links in the description for both below. CTA is only $30 a month, and you get 14-day money-back guaranteed trial here. So what we're doing now is we're dollar cost averaging into our trade. We said we would do that. So now our cost basis is 100.93. Friday's closing at 94.85. And so I think there's some momentum that's going to build here, particularly with the machine positioning. Let's head over to the charts. Take a look at TLT. And here we can see that kind of spring effect. Let's zoom into the 1-year chart. We saw just rampant selling coming out of Asia and everyone else just piling in on the trade. It came down and sort of close to making a double bottom. It could have gone a little bit further, and now it's bouncing up here, and then it pulled back on Friday and is looking to take off. If this thing breaks out of here and the machines get behind it, you could see a big rally, because one thing is important to note here. Everybody is short bond market. I mean, there's so many shorts, and it doesn't mean they're just implicitly short because they're holding a position. They might be short because they don't have a position at all and look for people to chase the bond market higher. All right, let's talk about gold buying above on the machines, $19.90 an ounce. Still making the case we're going to see gold just outright crumble. I know many people say, no way, not going to happen. I'm telling you, look at history, tends to be what goes on. All right, how about gold GLD momentum? Positive, RSI 58. Everybody's moving up. You see momentum building in the market across all things here. Equities, bonds, commodities. Positive cross on the MACD, 7 consecutive daily buy signals. We're still holding no position on this upside target, 181.90. That's, or wherever the 100-day moving average is, that's our target. Downside target, I revised slightly higher. You'll see our CTA reports almost maxed out on the long window. You have pretty much following what you see in the S&P 500 here. So, all right, here we have GLD. Base cases rally into the 100-day moving average. You see that volume profile, 181. There's the target. Gets rejected there. Look for this thing. You see this top forming here. You got left shoulder, head, right shoulder. Maybe you get a second one. At some point, this thing rolls over. You can definitely see sellers are all over this thing. You can even see it on gold futures here. There's your target, 1963 to the upside. And now let's take a look at GDX, because the miners often lead the metal. Not often, but most of the time. So what do we see with GDX? Momentum is positive. RSI is at 54. MACD's got a positive across 7 consecutive daily buy signals. Again, holding no position. Upside target 30 to spot 58. That's your 200-day moving average. Downside target unchanged. Notably, we see the miners buying up to following the metal there, and that is a positive sign. Let's head over to the charts here. and take a look at what's going on. GDX, you can see our target here is going to be that 200-day moving average to the upside, and I'm looking for it to kind of run into resistance up here. We've seen this is where sellers have been at, again, roughly right in that zone. Roll over. Again, the target I'm looking for, I'd love to see it get down here in that $26 price range, hold there, and that would be a catalyst to buy another leg up before this thing rolls. But I want you to see, look, you have a left shoulder head, a smaller right shoulder, maybe a second right shoulder forming. So it has all the indications of a topping pattern. Keep that in the back of your mind. All right, now let's head over to the dollar, because this could be the game changer for the whole markets here. Everyone thinks the dollar is going to turn around and weaken. Of course, global trade does. It will. How about momentum? Still positive. RSI at 59, but slowing. MACD, positive cross, but maybe not for long. Momentum Timer Pro, 29 consecutive daily buy signals. No position. You might want to look at the short side of this. Of course, the case here on the short side is when you're looking and trading momentum, you want to look for these extreme positions. It's why we run these reports for you, to help you find them. So let's take a look here. 29 consecutive daily buy signals. Maxed out on the 1 month, almost maxed out on the 3 and 6 month windows. Tells you at some point this hits an extreme. And look at our CTA positioning, maxed out to the long side. All it's telling you again, look for a reversal. Dollar bearish ETF. We have it on our reports. You can check those out. But our target just missed our target to the upside. I see a downside move here to 28.34. Can this thing get a little bit higher? Well, I'm going to say 29.27. Yes, I think we can get up here possibly, but I don't think there's a whole lot more left in this dollar move. You can see it's at oversold territory. MACD looks like it's slowing down and about to roll. But remember, stocks can stay, or securities can stay oversold for much longer. I'm still not giving up on one last hoorah on the dollar. But how about our trade on platinum? We showed you how to do a recovery trade, and it is working. Here we can see on August 23rd, we added a position from our CTA report. We showed you how to do this. Cost basis, 87.66. Friday's close, 88.68. Our upside target is a 200-day moving average. Now you can sell here, or what I would suggest you do is that was where you would set the stop loss. So if this thing gets up to the 200-day moving average and you don't sell it, put a stop loss underneath there. If it rallies up, switch it to a trailing stop. Make this easy for yourself. That way you don't have to fall. If it rallies up and pulls back a little bit, boom, you're out. That's the way to play it. As you can see, using our reports, if you don't trade with stop losses all that often, showing you how to do a recovery trade, worked out beautiful. Let's take a look at the charts of platinum, because I actually think it's going to go higher than it is showing at the 200-day moving average. Let's zoom out a little bit. We are on the 1-year chart. I think we rally up here to the 200-day. Wouldn't be surprised. The sellers are at 93.52. If it breaks through there, I think you got an easy run at 100. Makes this a fantastic trade setup. Again, it's just a matter of using the reports and properly using stop losses. Again, get up to that 200-day moving average, then go ahead. If it breaks through, or put a stop loss maybe right underneath. If it breaks through, switch it to a trailing stop. Let the thing ride and make this one of your best trades so far. And of course, if you have CTA-Timer Pro, you got a whole bunch of them on a regular basis. But with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.